Friends, today we are going to cover another very important topic, important regulation, important order, important provision of the Companies Act, and that is CARO 2020. Now, CARO 2020 was brought out in February 2020 and it was to have been implemented for the financial year 1920. But for different reasons, including COVID, the implementation of CARO was shifted and finally it has become applicable from 1st April 21, corresponding to the financial year 2021. So CARO is already in force and that is what is going to be our focus in today's session. What are we going to cover in this session today? We would start with background and intent behind CARO. It is always good to have the background of any of the provision, because once the background becomes clear, understanding of that particular provision also or the law also becomes very easy. So we would start today's session with background and intent behind CARO, applicability of CARO as to whom CARO is applicable, and to whom CARO is not applicable. So we also talk about the companies to whom CARO is not applicable. Incidentally, CARO is also not applicable to a small company, but for that we need to understand as to what is the definition of a small company. The last CARO that we had was CARO 2016. So we would also understand as to what are the changes that have taken place between the CARO 2016 and CARO 2020. After that, we would be focusing the 21 matters which are specified in para 3 of CARO 2020, on which the auditors of different companies are required to specifically comment on. Then we would come to CARO para 4 and para 4 of the CARO 2020 and then we would look at as to what are the tasks or the obligations or the jobs or the functions or the activities which are to be carried out by the auditors of the companies to whom CARO is applicable. So friends, this is the agenda and the plan that we have for today's session. Let me begin with the background and intent behind CARO. Now, today we are well aware that there is a separation between the ownership of a business and the management of a business. Unlike in the past, when the size of the businesses were very small, the owner and the manager of a business was same, and therefore in case if the owner as a manager did something wrong in the business, it was he only as owner who would suffer, and therefore it was perfectly fine when the businesses were small. Today we are in a different environment. Today what we have? Today we have mega corporations. We have companies in which the public is interested. So therefore there is a separation of the ownership of a business and the management of a business. And therefore it becomes very necessary that care needs to be taken to safeguard interest of the owners. क्योंकि जो मैनेजर है बिजनेस का और जो मालिक है बिजनेस का वो अलग अलग लोग हैं, तो सीधी सी बात है अगर एक बिज़नेस का मैनेजमेंट किसी के हाथ में दिया जाता है तो बहुत ज़रूरी है कि ओनर्स का जो इंटरेस्ट है वो सेफगार्ड हो, उसके लिए कुछ ना कुछ स्टेप्स उठाए जाएं. एंड वन ऑफ द स्टेप्स इन दैट डायरेक्शन ऑफ कोर्स इज़ द अकाउंटिंग, and not only the accounting but also the audit. To further supplement this audit, you have this CARO 2020. Meaning what? Meaning the financial accounting and the audit of those accounts will take care of certain aspects, will take care of how the transactions have been recorded. Are there any inadvertent or intentional errors in the financial accounting? So those aspects would be taken care of through the process of normal audit. But there are certain areas where which can also be referred as problematic areas, and therefore under CARO the intent behind the government, behind the CARO, from the very beginning has been to keep on identifying these areas and keep on identifying these areas and then keep on asking the auditors of the companies to whom the CARO is applicable to specifically concentrate on those areas and cover and comment on those areas in their audit report. So that is the intent behind the CARO that we have. So remember, purpose of financial audit is not to trace frauds. That should happen automatically. So जो audit है उसका मकसद ये नहीं है कि frauds को trace करा जाए. The audit should be done, and in case there are frauds in a business or in a company, those frauds should automatically surface as a result of the audit. So the purpose of the audit is to ensure the operations of the business have been run as they were required to run, and that is the purpose behind the audit. There are no inadvertent or intentional mistakes and errors in financial reporting, and if these are there, then the same should be corrected, and that is the purpose of the audit. So audit is to give comfort to all stakeholders about the veracity of the reported financial statements. Audit is also to safeguard interest of all stakeholders. While the audit of financial records takes care of accounting part, there are certain areas which need specific attention, and it is for taking care of these specific attentions. These areas are identified and then specified by the government from time to time in the form of CARO. Now, what this CARO is? So the company's auditors report order to 2020 is referred by us in our discussion as CARO. The company's auditors report order. It was issued on 25th February 2020, was to have become applicable for the financial year 1920, but now finally it became applicable from the financial year 2021. It is applicable to every report made by the auditor under section 143 of the Companies Act, applicable to foreign companies as well, defined under section 2 subsection 42. So it is not that the foreign companies are exempt from the provisions of CARO. No, a foreign company as defined under section 2 subsection 42 is also covered under the provisions of CARO. It is not applicable to auditors' report on consolidated financial statements except to qualifications or adverse remarks in the consolidated financial statements. CARO spells out the minimum mandatory areas. So what CARO does, friends? CARO basically specifies certain minimum mandatory areas which should be addressed by the auditor in his report in respect of a company to whom CARO is applicable, and this is the CARO. So CARO 2020, to which are the companies to whom CARO 2020 is not applicable? So if I say that these are the companies to whom CARO is not applicable, so by default it becomes applicable to all the other companies. So as it stands today, CARO is not applicable to banking company, it is not applicable to insurance company, it is also not applicable to company licensed to operate under section 8 of the Companies Act. It is also not applicable to one-person company, that is OPC, or a small company. So these are the four broad categories to which CARO is not applicable. As regards the private limited company, it is not applicable to a private limited company only if this private limited company, number one, is not a subsidiary or holding company of a public company. So if there is a private company, it is holding company or a subsidiary company of another public company. So even if this company is a private limited company, CARO is going to be applicable in case of such a company. A private limited company having a paid up capital and reserves and surplus not more than 1 crore. So there a private limited company which is not a subsidiary or a holding company of another public company, CARO is not applicable. So, but if a private limited company is a holding company or a subsidiary company or of another public company, that means CARO is going to be applicable to this private limited company in any case. There are three more parameters under which the CARO will not be applicable to a private limited company. And remember, these three provisions have to be met collectively. What these provisions are? These provisions are number one, a private limited company which is having a paid up capital and reserves and surplus not more than 1 crore. And number two, does not have total borrowing exceeding 1 crore from the banks and financial institutions. And number three, does not have total revenue exceeding 10 crore. So if these three parameters are met, in that case, such a private limited company is also not covered under the ambit of CARO. So what are the three parameters? The parameter number one is company का जो paid up capital है together with the reserves and surplus should be less than 1 crore. इस company की जो borrowing है should be less than again 1 crore और इस company की जो total revenue है should be less than 10 crore. So if these three parameters are met, then such a private limited company is not going to be within the ambit of CARO. But if any of these parameters are broken, and in that case this private limited company, to this private limited company, CARO will become applicable. Now, as we said earlier that CARO is not applicable in case of a small company, and for this purpose it becomes necessary for us to understand as to which is a small company. So section 2 subsection 85 of the Companies Act defines as to which is a small company. So a small company means a company other than a public company where paid up share capital does not exceed 50 lakhs or such higher amount as may be prescribed, which shall not be more than 5 crore in any case. So a small company is one where the paid up share capital does not exceed 50 lakhs or such higher amount as may be prescribed, which shall not be more than 5 crores in any case. And the turnover of this company does not exceed 2 crore or such higher amount as may be specified, which shall not be more than 20 crore in any case. So if these two parameters are met, then such a company is referred as a small company, and such a small company will not be within the purview of the CARO. That means the auditor of such a company will not have to specifically write about these 21 areas which are specified under CARO 2020. And now remember, the company shall not qualify as a small company. So which are the companies that will not qualify as a small company? Number one, a holding company or a subsidiary company will not qualify as a small company. A company registered under section 8 of the Companies Act will not qualify as a small company, irrespective of what is the paid up capital or what is its revenue or its income. A company or body corporate governed by any special act will also not qualify as a small company. So this is what we need to remember, that these are the companies to whom CARO is not applicable. Now let's move to the changes in CARO 2020 from CARO 2016. So there are certain new clauses which have been added in CARO 2020. Now, which are these clauses? Clause number one is unrecorded income. So an auditor of a company to which CARO is applicable has to specifically address and report about unrecorded income that may happen in case of a company. About number two, internal audit system of the company. Number three, incurred cash losses. So in case if a company to which CARO is applicable has incurred cash losses, that on that cash losses that the company has incurred, the auditor is required to make a specific report and cover and address the same in his auditor's report. Point number four, resignation of statutory auditor. So this is again a new clause, new provision in CARO 2020, where in case if statutory auditor of a company has resigned in a particular year, now the auditor who is doing the audit of this company will have to report about the auditor resigning of this company, and also covering as to the reasons behind the resignation, and also he would need to write as to whether he has collected adequate information or relevant information from the outgoing auditor. Number 5, no material uncertainty about company's capability in meeting its liabilities. Now this is again a very interesting aspect. Now please remember, when we talk about CARO, why CARO or why audit, why accounting? So whether it is accounting or it is audit, it is CARO. It is only to ensure that there is a good corporate governance. It is to ensure that the interest of all the stakeholders are duly taken care of. And it is from that perspective the different provisions are incorporated in CARO. So the new clause that has been added in CARO 2020 is with regard to no material uncertainty. That means auditors of a company will need to ascertain and evaluate and find out as to is there any material uncertainty about company's ability to take care of his obligations. If it is so, then the auditor would require to specifically mention as to how and why he feels that there is a material uncertainty about ability of a business in taking care of his liabilities going forward. Then there is a new clause which is inserted, is transferred unspent amount to a fund specified in Schedule 7. So Schedule 7 is the schedule that includes all the items on which a company can do the CSR spending as required under Section 135. So in case if a company was under obligation to incur a corporate CSR spending, and if part of the obligations has not been spent, and if the balance amount has been transferred, that unspent amount is transferred to a fund that is specified in Schedule 7, now that also would need to be reported by auditor of a company. And of course the clause, the seventh new clause which has been inserted in 2020 is qualification or adverse remark in consolidated financial statements with regard to the remarks or the qualification or the adverse remarks which may have been given by the auditors of the companies whose accounts and financials have been consolidated. So that is the only item that would need to be reported as regards the consolidated financial statements of a company. So these are the 7 new clauses which have been inserted in CARO 2020. Now, which are the old clauses deleted from the CARO 2020? So the 2 clauses which have been deleted, number 1, approval of managerial remuneration. So it was in the earlier CARO of 2016, there was a clause where an auditor was required to report about the approval of managerial remuneration. Now that clause has been removed in CARO 2020, and likewise there was a clause in CARO 2016 about private placement or preferential issues. Now this was a separate clause in CARO 2016. Now this separate clause has been deleted in CARO 2020, but it has been included as part of the clause 10, and which is a much broader clause. So friends, these are the changes which have taken place as far as the CARO 2020 is concerned since its last version, and that is CARO 2016. Let's now come to the 21 areas specified in para 3 of CARO which are required to be specifically reported in the auditor's report as per section 143 of the Companies Act. So now friends, what we are going to do, we will discuss these 21 areas. So the first clause is clause 1, and that is about the fixed assets. So as per CARO 2020, the auditor of the company is required to make specific comments with regard to the fixed assets of the company. And when I say fixed assets, not only the tangible, intangible one, but also the intangible. So each and every aspect of the fixed assets of a company will need to be reported. Whether the company has maintained the records, whether the company has done the physical verification, whether there are certain fixed assets which are the assets belonging to the company but standing not in the name of the company but is standing in the name of somebody else. Now if it is standing in the name of somebody else, now what is the reason for those the reporting or the ownership recorded. Now clause number 2 is about inventory. So again, all aspects about the inventory, whether the physical verification has been done of the inventory, if there are variations found which are more than 10% of the value of inventory, and if there have been such variations found, then have those variations been recorded or corrected or dealt with appropriately in the financial reporting. That is what would need to be reported. Clause number 3 is loan given by a company. So friends, again here I would like to emphasize why all these clauses, why all these 21 clauses as part of the CARO. These 21 clauses are there as part of the CARO because these are the areas where things can go wrong or things have gone wrong based on the past experience. So when the government of India brings out amended CARO, what they do, they take into account whatever wrong things that may have happened since the introduction of the last CARO, and what they try and do, incorporate those areas in the CARO so that from that point onwards such irregularities or such malfunctioning or such wrong reporting or such goof up can be avoided, or such bungling or such frauds can be avoided. So the clause number 3 is about loan given by a company. So obviously every kind of loan, advances, guarantee, security which may have been given by a company with regard to any recipient. So all the details, all the details of the loans would be will need to be specifically incorporated in the auditor's report as part of the CARO. Meaning what? Meaning what are the amounts of loan that were given and how much of that were outstanding, and what were the terms and conditions of these loans. Were these loans and advances or security or guarantee given to any party which is related party. So that is what would require to be done. In case if the advances have been given, loans have been given, credits have been given, are the terms of those loans and advances are documented? Are the interest recovery or the recovery of the principal, is it happening as per the terms of the loans and advances given? All that will need to be specifically reported as per clause 3 of the CARO by the auditors of the company. Clause number 4 is about loan to director and investment by the company. So clause 3 talks about loan given by the company, and remember clause 4 is about loan given to the director. So it's quite obvious if the loans are given to the director, and that is where the question of good corporate governance can come. So in case if the loans have been given to the directors, then these loans that have been given to the directors or these investments which are made by the company will need to be reported as per clause 4 of CARO. Clause 5 is about deposits. So in case if the company has accepted deposits, then the auditor will need to report specifically as to whether the provisions of the Companies Act with regard to the acceptance of deposit have been duly complied with, whether the terms of the deposits, payment of the interest or repayment of the principal, whether that has taken place regularly or not. In case if there are any defaults, then those defaults will need to be reported as per clause 5 of CARO. Clause 6, friends, is about cost records. So the government of India from time to time keeps notifying certain industries to which maintenance of the cost records becomes mandatory. So in case this company is under the purview of cost audit report, and whether this company has maintained the cost audit report or not, that is what would need to be reported by the auditor under clause 6. Clause 7 is about the statutory dues. Remember, so the auditor would need to report about the statutory dues, whether the statutory dues as applicable to the company have been paid by the company from time to time. Are there any undisputed statutory payments which are outstanding as on the date of the balance sheet? All those will need to be reported as part of the clause 7 of CARO about the statutory dues, and we can understand. So in case if I read audit report of a company, and if I see that this company has outstanding or overdues on account of statutory payments, I can very easily get an idea that something is seriously wrong about this company, because statutory payments is something that a company would pay the first and then would make the rest of the payment. So if the company is defaulting in making these statutory payments, that means something is wrong with the operations of the company or with the cash flow of the company. Then you have clause 8, which is about the unrecorded income. So in case the company which is being audited by the auditor, if there have been cases of income which was not recorded in the books, but it was subsequently surrendered or informed or accepted before the income tax authorities. Now, any such income will need to be reported. Any such income which is unrecorded in the books will need to be reported. And what will also need to be reported, whether any such unrecorded income of the past have been duly dealt with in the books of accounts or not. And that is your clause 8 about the unrecorded income. Clause 9 is about repayment of loan. Obviously, as a business, the companies would take loan for different purposes. The loan can be for the purpose of project. The loan can be for the purpose of working capital. So it is absolutely necessary for the well-being of a company that this company must be repaying the loan. This company must be servicing the debt regularly. So in case if company has incurred any defaults in servicing the debt or in servicing in repaying the debt, then all such matters would need to be reported by the auditor as part of clause 9 of CARO 2020. Now, clause 10 is about utilization of IPO and further public offer. So companies would raise money through IPOs, and not only through IPOs but also through further public offer. And when a company is raising money through IPO or through the further public offer, these companies, when they come out with IPOs, when they raise money from the public through these IPOs, they would always mention under the SEBI regulations as to how these funds are going to be used. And when this money is raised, this capital is raised by these companies are bound to use those funds only for the purpose for which they have reported while raising the money. Now, under clause 10, the auditor is under obligation to report as to whether the money is raised or the capital raised by the company through the IPO or through the further public offer, whether those funds have been used for the purpose for which they were supposed to have been used or for the purpose they have been raised. So in case if there are any defaults, then the auditor would be required or under obligation to report as to how much of the amount has not been used for the purpose for which it was raised, and where it has been raised, and things like that. And that is what would need to be reported under clause 10 of CARO 2020. Then under clause 11, the auditor is required to report about the reporting of fraud. So in case if there has been any fraud by the company or there has been a fraud on the company, under clause 11 of CARO 2020, the auditor is required to specifically make a report as part of his audit report and report to the shareholders of any such fraud that may have taken place and that may have come to his notice while carrying out the audit. And then clause number 12. Clause number 12 is with regard to the Nidhi company. So there are certain obligations which Nidhi company got to maintain with regard to the ratio between the owned funds and the deposits that they may have accepted. So the ratio is of 1:20, and they're also supposed to maintain 10% of the funds in certain liquid funds. So whether those obligations of the Nidhi companies have been honored or maintained by the Nidhi company or not, that is what is required to be reported as under clause 12 of CARO 2020. Clause 13 is about related party transaction. We all can very easily understand one of the ways through which the managements of the company can misuse the resources of the company is through the related party transactions. So and there are many ways in which this can be done. So if in case if the auditor becomes aware that there have been certain related party transactions which needs to be brought to the attention of the shareholders, because in his view these related party transactions are not at the arm's length, are not above the board. So all such related party transactions would need to be specifically covered by the auditor in his report under section 143 of the Companies Act 2013. So all the related party transactions and the amounts with the related party transactions and all the details would need to be incorporated as part of his report under section 143. Then under clause 14, the auditor would need to report about the internal audit system. So whether the company has got adequate internal audit system or not, and that is what would need to be reported by the auditor in his report. Then clause 15 of CARO 2020 is about the non-cash transactions, and more so non-cash transactions with the directors. So in case if the company has done any non-cash transaction, and what would it mean by non-cash transaction? Basically, in case the company has sold certain assets or bought certain assets or have done any other kind of transaction with the directors of the company where the consideration is not paid or exchanged in the form of cash, but it is done in the form of kind. So all such transactions which are of the nature of non-cash transactions, now these transactions as per clause 15 of CARO would need to be reported by the auditor in his report. Clause 16 is about register under RBI Act 1934. So in case if a company is working as a financial service company or having activities of of that kind, or if a company is required to be registered because of its financial activities or investments, if it is required to be registered with the Reserve Bank of India, whether such registration has been done by the company or not, and if it is done and if it is not done, then such non-compliance with the RBI Act by such company will need to be reported by the auditor as per clause 16 of CARO 2020. Then clause 17 is about the incurred cash losses. So as I discussed in the beginning with you, and that is, it's a new clause that has been inserted in CARO 2020 since the CARO 2016, and in case if a company has incurred cash losses, now this cash loss also would need to be reported by the auditor in his audit report specifically as to what is the amount of cash loss that the company has incurred. And how do we define the cash loss? So cash loss would be defined as the loss incurred by the company, and we reduce that amount of the loss which is reported by the company by the amount of depreciation, amortization and the impairment loss. So when we adjust the amount of loss that the company has incurred, what we get in our hand is the amount of cash loss that the company has incurred. So please remember, cash loss, why it needs to be reported by the auditor, because the amount of cash loss that the company has incurred will give an idea to the investor or to all the stakeholders that this company is not able to generate enough enough cash for running its operations. So if the company is not able to generate enough cash for its operations, that means this company is in trouble, and that is what would need to be reported as part of the as clause 17 of CARO 2020. Then again there is a new clause 18, as I mentioned in the beginning, and that is about resignation of statutory auditor. So in case in a particular year the statutory auditor of the company have resigned, then the incoming auditor, or the auditor who is doing the audit of the company's company, he would need to report about the resignation of the statutory auditor, and he would also need to explain as to what were the reasons for which the statutory auditor have resigned, and he would also need to confirm as to whether he has gathered all the informations and required details from the outgoing auditor. Then you have a clause 19 in CARO 2020, and the clause 19 of CARO 2020 is with regard to no material uncertainty about company's capability in meeting its liabilities. So remember, as a shareholder in any company, I would always be interested to find out whether the company in which I have invested my money, whether the company where I have put in my money, whether that company is able to take care of his liabilities and of his obligations. So that is what we would need to take care of. बैटरी लो दिखा रहा है, तो ठीक, उसको कैंसिल कर दो और चलने दो. नहीं, स्टॉप मत करो, चालू करो. एक सेकेंड. बैटरी ख़त्म होने गया है, वैसे भी कोई प्रॉब्लम नहीं है, तो बैटरी अभी ये कट नहीं है बस खाली. इज इट ऑन? चालू है? ओके. सो नो मटेरियल अनसर्टेनिटी अबाउट कंपनीज कैपेबिलिटी इन मीटिंग इट्स liabilities. So as I was telling you, sorry for the interruption, as I was telling you, as an investor, as a lender, as a stakeholder in a company, I would always be interested to know as to whether the company has the capability of taking care of its obligations going forward, and on that the auditor would need to make a comment. And please remember, this is a very important area for an auditor, because for coming to a conclusion whether there is no such material uncertainty about a company's ability to take care of his obligations, he would really need to look at many things and find out whether the company's cash flow going forward is strong or not, and on that basis he would be able to make a comment with regard to the no material uncertainty. Then you have a new clause 20 as part of the CARO, and this new clause 20 and this clause is about in case if there is any unspent amount as per section 135 of the Companies Act with regard to the CSR spending, if certain amount is remaining, a certain amount that the company was required to have spent on the CSR activities, if it has not been spent, then this amount would need to be transferred to a fund which is specified in Schedule 7 of the Companies Act. So has any such amount transferred to a specified fund as per Schedule 7 of the Companies Act would need to be reported by the auditor under clause 20. And finally friends, we are at clause 21. So clause 21 is about qualification or adverse remark in consolidated financial statements. So please remember, as far as CARO 2020 is concerned, it is not applicable to the consolidated financial statement. It is only one clause, which is clause 21 of CARO 2020, which is applicable in case of consolidated financial statement. Now what does it mean? It means in case of an auditor for a consolidated financial statement, he would not need to report about the first 20 clauses that we have just discussed, but he would need to cover or address in his audit report the clause 21, and that is in case of a consolidated financial statement of all the companies which are getting consolidated in the consolidated financial statement, if auditors of those companies in making their audit report, if they have reported any adverse remark or qualification with regard to those companies and with regard to these 20 clauses, Now that would need to be reported by auditor of a consolidated financial state, auditor of a company whose statements are consolidated, and that is the only required clause 21 with regard to the consolidated financial statement. The remaining clauses, remaining 20 clauses are not to be reported in case of a consolidated financial statement. So friends, these are the 21 clauses which are part of the audit, which have to be part of the audit report under section 143 of the Companies Act, and these 21 clauses or these 21 areas which are specifically covered in CARO 2020 will need to be commented by the auditors in their report. So what are the tasks before the auditor under CARO? So the task before under CARO 2020 before the auditor is: number 1, auditor's report has to contain matters specified in para 3 and 4 of CARO. Number 2, the auditor of any such company to which CARO 2020 is applicable, the auditor will have to do detailed scrutiny of all 21 matters that I have just discussed with you. Will need to do a detailed scrutiny, and please remember, the detailed scrutiny has to be independent, and no management certificate will be accepted with regard to these 21 points. So that is the point number 3. Point number 4, reasons to be stated for unfavorable or unqualified answers in case if there are any, and finally what the auditor will have to do with a view to comply with the provisions of CARO 2020. He would need to prepare a detailed checklist, and based on the detailed checklist he would need to carry out a detailed scrutiny of these 21 matters, and that would help him to report on these 21 matters in his audit report under section 143 of the Companies Act. So finally friends, before I close, I would like to mention the purpose of audit obviously is not to trace frauds. Frauds should surface automatically when the audit is being done. So what is the purpose of the audit? The purpose of the audit is there is a separation of management and the owner of the business. The interest of all these stakeholders need to be taken care of. Whether the businesses are being run in the manner in which they have to be run, whether that is being done or not, that is what audit is to take care of. Audit is to give comfort to all these stakeholders, including the shareholders, that their interests are being taken care of. The business is run as they would expect the businesses to be run. And to ensure this, we have a system of the audit. To further buttress this effort, we have CARO from time to time, which keeps on upgrading. Friends, I hope this session that I have delivered with you just now would be helpful to you, will be useful to you. If it is, please do let me know your feedback, and do subscribe to my channel. There are about 1000 videos that I have uploaded on my YouTube channel relating to valuation, insolvency and bankruptcy code, advanced financial management, finance for non-finance, work-life balance, leadership, management, so on and so forth. And so do subscribe to my YouTube channel and take benefit of all those videos that I have uploaded. Thank you so much, and see you soon again with another topic going forward. Thank you.